Hi everybody, welcome back to my channel. In the previous video, I was looking into my current portfolio on my other page, but then a lot of people were like, oh my gosh, it's fake. It's just made up numbers and made up stocks, stuff like that. Well, I'm going to show you this right now. So this is my portfolio that I'm showing you in the screen at the moment. And as you can see, 27,000 altogether with 4,000-ish that are gains. So when we look into this current portfolio, I'm going to tell you that we have the same holdings as on the website that I showed you before, but this comes to tell you that, again, this would be a lot easier if I just show you this. And a lot of people are like, well, why don't you show us this? There's a lot of reasons for that, but for now, this is what it's going to look like, okay? So again, I'm not lying on any of these stocks that I'm picking. But what I'm going to tell you today is that I don't actually recommend stock picking for you. For you, yes, you. I don't recommend it because there are certain types of, I would say, reasons of why I wouldn't recommend it for just your everyday Joe Schmo and Julia Schmo out there, because it takes a lot of stress and it takes a lot of research. It takes a lot of basically everything. It's a high risk, high reward sort of growth. Now, if you want safe and it's less stressful, I would say put your money in these three performing ETFs. Okay, so as you can see in the screen right now, you can't clearly see it on the right side, but we have SCHG, which is your large cap, and then we have the VOO, which is a lot of people are kind of like, well, what, you should put your money in VOO. Well, I agree with that. And if you look at the VT, which is the Vanguard Total World Stock, it's at 82. But again, you're looking at my portfolio and you're like, Happy, why is this 62? 62%. Well, you could potentially put double that if I put it into SCHG or VOO. And you're completely correct. You're completely correct. But here's why I don't do ETFs. I am here to tell you that this is one of my 2 or 3 other portfolios, but this one is the lowest, I would say, the lowest when it comes to the account or the cost of what I put in. So at the moment, with all just 10 positions, as you can see here, half of my current portfolio right now are positive. The other half is all negative. And you're thinking to yourself, like, Happy, why would you say that? Why not just put your money into ETFs? Because I have a lot of convictions here. As you can see in the bottom of my screen, we have Rivian, Copart, PayPal, and also Duolingo, which I love. But what I'm going to tell you is that some of these companies, I do have a lot to change. So let's go over that right now. The first thing that I want to change for this company is the fact that PayPal is becoming the slowest growth, and there's less conviction that I have now. Like, the moat of PayPal has diminished over time. They've got a lot of competition. You don't have to use PayPal anymore. You could use whatever services that you have out there. It's no longer that central or that road or tollway system that people use for transactions, because you could use Visa, you could use MasterCard, you could use any other types of financial services out there. So this is really, this is going to really sound terrible, but again, I don't believe PayPal has a chance at the moment. I just don't think so. There was a lot of hype regarding PayPal buying Stripe, I believe. Okay, so quick editor note here. Regarding PayPal trying to buy Stripe, that was a long time ago, like a long time ago. And now it's actually going back the other way around. So I looked it up a little bit, and as you can see here, PayPal is now being approached by Stripe, and they might actually just go ahead and do that. So again, the tables has turned, and now Stripe is trying to buy PayPal.
Well, well, well. How the turntables.
That fell. That fell, and it was no longer something that a lot of people are kind of putting the hedge on, because that would have expanded their growth. That would have expanded their ability to um, to to have more revenue, right? Right now, it's just cryptos and pay later type of features, and there's split bills, and you can do that with any other applications, any other type of services today. So the moat of PayPal has diminished. The second one is technically CCC or Copart. Now, CCC is a company that is specifically focused for insurance, crashes, and auto claims. Now, when we go down the rabbit hole of CCC, it sits in the middle of the OEMs, the insurance, and also all other factors when it comes to vehicles. The biggest motivation of buying CCC was the fact that it's a complete auto shop for you. They take care of your services. They take care of the shipping. You can pick it up also, obviously. But when it comes to vehicles, when it comes to reselling, you know, Copart and CCC goes hand in hand. But from a CCC perspective, it sits right in the middle, right? It is using AI to develop and to predict what the cost of that crash or of that insurance is going to be, based on pictures, based on the parts and everything else. And again, based on the black box, it's the whole ecosystem of the vehicle. But this is very much for the future, right? So what I've done here was to buy a company that is lightweight and it has a lot of revenue. And right now, CCC is sitting in the sweet spot of that. But as you can see, most of the price and the info, at least for the financial stats for CCC, is just astronomical. I mean, PE ratio of 91 times for that price. You're paying too much, but for a cheap, it doesn't make sense. So at the moment, I've stopped buying more of the CCC stock, but I do have realized gains here. So again, I will be planning to sell that, and I will be planning to put more stocks into, let's just say, BN or the Brookfield Corp, right? But let's talk about the biggest elephant in the room, or in this case, bird of the room, is Duolingo, which it has negative $2,000. And I put basically $5,000, more than Google, more than Amazon, more than Netflix. I've doubled the size. But why am I buying? Now, Duolingo is one of those applications or services that provides learning languages or other types of form like chess or math, for example. You can basically learn any type of languages or any sort of secondary skills to be better, right? To get you education, to get you through training, to get you through whatever that may be. And again, Duolingo, I think at the moment there's like 5 languages now that are becoming a college level kind of entry into that, or maybe just getting you a basic level job. So again, Duolingo is a future product that I believe in specifically, and I'm putting my money where the beak of Duolingo is. All right, because again, I believe Duolingo is going to be a ginormous powerhouse in the next couple of years. And technically, it feels very much not like Netflix. Because Netflix back in the day, the revenues, financial revenues, financial debt, financial stats altogether was going to the right direction. But there's one single stat that broke everything. It's the monthly subscription. It is the growth of that. Is it going to keep going? Is it going to slow down? So 1 month or one of the quarters, it did slow down because there was a lot of that stuff going up during COVID, and after COVID, it kind of just equalized, right? So it was I would say, a superficial padding of stats is what I call it. But the numbers and the financials were going up. It wasn't going down. It was going up. The moat is getting bigger and bigger. Duolingo is the same thing. It's completely the same thing. The numbers are going up. The financials are going up. But the stock price is going down? Why? Because of AI? A lot of people are stuck in this way where they think, oh, AI is just going to destroy Duolingo. It's going to destroy the learning languages app, destroy education, right? And they're just going to rely on AI. That's not really the case. There's a lot of improvements and a lot of capabilities that Duolingo has to offer. And at the moment with this price, I bet you that average price that I have there, 177, right here, that's going to go down because I'm going to keep buying Duolingo this year. It is technically the accumulation phase. So when you look at the graph, let's just say the last 2 years, as you can see, it peaked to 530, and then it just went down. Why is that? Because they said that the numbers were low, or the daily or the monthly users are going down. But overall, year over year, it has increased. So people look into this as a short-term type of stock. And I don't believe that. I believe this is a longer term stock. Now, why did it go up from, I think it was 160-ish, 2 years ago, and then it goes up, and then it just crashed all the way down? I think this is more of getting the right people into that same specific baseline mindset. We're not here for money. We're here to educate, to make this product better, more accessible, so that it opens the criteria of buying into the subscription. So please, folks, do your own research. But what I've done with my portfolio is to set it up so that it has the potential to 2x, 5x, and so forth. And if you don't like the strategy, go buy the ETFs. That's what I recommend to you. Is if you don't want the stress, you don't want the risk, go with the ETFs, and it's gonna make you money. But if you want high risk, high reward, stick with stock picking and making sure that you understand the stocks that you are buying into. Talk to you soon. Right? I think, yeah. Talk to you soon. See you later.